Hey everybody, this is Jose. We are about to get started in around 30 seconds. Let's use this time wisely to check our sound. Please go ahead and type a quick message in the chat box just to confirm you hear my voice. It will be greatly appreciated so we can start on time. Thank you very much. Wonderful. Thank you very much, Dirk. Okay, here we go. We just reached the top of the hour. So it's time to introduce the session officially. So let's go for it. Hello everybody, today is November 20, 2019. My name is Jose Blasco. I will be your guide in today's session. Today's session is about longer term trading. So we'll be looking at the markets, we'll be looking at options, opportunities, some of the options for directional trading, some of the options for non-directional trading. We'll be looking at all those different opportunities, plan for it. And 30 minutes from now, the market will open. So we'll be ready to execute the opportunities that we have found. And then we'll keep going with looking for more opportunities as well, okay? So let's begin. We have a disclaimer as always. So I'll go over the disclaimer quickly so we can start. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand and agree that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication of or prediction of actual results. So user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive on using our products. Here we go. This takes care of the official introduction, as I was saying. And therefore, here we go. We got our TradeStation ready here. As always, when we run our get-together sessions for longer term, we have been looking into running the scanner that we can find here on the left part of the screen. We've been running the scanner and we've been identifying opportunities where some of them are marked as directional. So those are opportunities for us to go long and short, adapting to, of course, the market climate, the on-field orders available in the market, AutoUFOs, etc., etc. And then we also have identified a collection of credit opportunities for non-directional trading, even though the two in the bottom, neutral long, neutral short, being non-directional, they have a little bit of a bias to the upside or a little bit of a bias to the downside. So what we normally do is that we always start with the pure non-directional trades, the ones that are tagged as ND, non-directional. And if we do find opportunities there, normally we are quite happy. And if not, then we open the door to look at the neutral opportunities, okay? So looking at the chat box here, wonderful, wonderful. It's nice to see you all, everybody. Wonderful. Perfect. Very nice. So let's begin. Okay, let's begin. And again, looking at the clock, we got 28 minutes for the market to open. So what we normally do is that we start with non-directional. We also know, just in case you are joining the session for the first time, we also know that at 9:20 a.m. New York time, what happens is that the options chain that we need to be able to plan the trades, the options chain reset. And therefore, at the time, for 10 minutes, we are kind of blind when it comes to accessing options market prices, options market data. Okay. So what we're going to do is begin the day, as always, looking for non-directional opportunities. We got 15 minutes or so to do that before the option change reset. If we were to find something tradable, we'll make a note so we are ready to trade it when the market opens. And then at 9:20, we will then move into directional opportunities because there is more work to be done on the charts if you wish. So we can work on chart setups during those 10 minutes from 9:20 to 9:30. And then when the market opens, then we'll be ready to conclude both the directional and the non-directional trades. Okay, it's just attempting to be as efficient as possible with the use of our time. So let's begin. Okay, non-directional. We have a collection of trades here. I'm looking at the higher prices. Normally, as you probably know from other sessions, would be the preference. And starting from the top, GLD obviously shows up as a high price point, but remember GLD is an ETF. So then we're gonna go into low. Nothing wrong doing these trades with ETFs, okay? But normally you get paid less. And also some of the ETFs, such as GLD, they may actually be problematic in the sense that gold trades 24 hours. Yeah, so with an ETF you only get kind of like a third of what a full day would be, and therefore there is a lot of missing information. Okay, so when looking at low, it's basically making all-time high. Okay, and so in the 55, notice how that stock is gapping up 4.93%. So I'm just wondering, I'm gonna bring the Yahoo Finance website here. I'm just wondering if maybe this is because Low is reporting earnings today. I would not be surprised. And that is the reason why, we're having this result. And yes, that's the case. November 20, it's the earnings date for Low, which happens to be today. And that's why that stock is moving so strongly. And obviously is not going to be a valid candidate for non-directional trading. Okay, MLNX, that's a stock that has always been borderline with liquid enough to be traded with options every time I've looked at the trades. Okay, but let's take a look and see what we are provided with today. So that stock reports earnings on January 28. Okay, January 28. So January 28 means that we do have decent amount of time from now until then to do trades. But certainly when looking at pre and post market data, the probabilities are way too low. And by the way, I know it's pre and post market data when I see the blue and I see the magenta color. That means it's pre and post market. Okay, so if I just move to regular session data, I don't have color candles, it's all gray. And if I was to do that, now I end up with 50%, which that is good enough for non-directional trades. Okay, and I do have UFOs both above and below. So it is looking like that maybe we have an opportunity to put a trade in place. So as you heard me say millions of times, without even thinking about it, okay, without even thinking about it, we're just gonna enter MLNX. Let me load that option chain, so we can go ahead and right click and insert. Actually, we're not gonna do this. Yeah, we're not gonna do it. That's it. It's that simple. Well, maybe yes. Let me take a look. Okay. Well, okay. Let me share with you what I'm thinking and why I had a very strong statement where immediately I said we're not gonna do it. And to be honest, we are not gonna do it. Look at the spreads available here. Even the next strike next to the at the money current price is 114, so 115 is the at the money strike. So if you move one strike away, it becomes crazy. Even the at the money strike from 145 to 380, it's absolutely it's just too much, and we're not gonna be able to do it. It's funny because that stock for years and years and years, I had the same problem with that stock, which is when we run the scan, we do have pretty, I would not call it extreme, but pretty demanding parameters for liquidity with open interest and everything. And that stock passes that filter, but then when you look at the option chain, is always quite disappointing. Okay, so anyway, we tried and it doesn't work. So we're gonna move now into Target TGT and see if Target could be a good candidate. So TGT. Okay, loading TGT. So with TGT, oh, wait a minute. I believe earnings on Target happened today as well. So Target November 20 will not be a valid peak either. Okay, good. Okay, so we went from top to bottom looking at the stocks that were above $100 a share. So now we're gonna go back up starting from the bottom, and I will have a stop here looking at Starbucks. And first, while the chart is loading, I will also be looking at the earning dates for Starbucks, which happens to be January 28, just like we had earlier with MLNX. In this case is Starbucks. Okay, so good. That's looking good. With using regular market data, we got 48%. We got UFOs above and below, so that's nice. And if we were to, instead of looking at regular session, we were to look at pre and post markets, so that 48.9 becomes 49 point something, which is better. Okay, which is better. Now, I'm not sure why we don't see anything below, probably because we need to go further out in time. So that was all this price data here. I mean, if I go all the way there, this is March 19. Okay, March 19. So let's go ahead and reload my 55-minute time frame. But I'm gonna have a starting date of March 2019 and reassess to see if we do or we don't have UFOs below price, which we do. Okay, so we have UFOs above and below price. Okay, and we do have a UFO performance stat of 52.77%, which is certainly appealing to begin planning a trade with Starbucks. And we can use here, we have a great array of different possibilities for the dates to be used, in the sense that earnings are not going to happen until January 28. Therefore, without even thinking about it, we're going to load Starbucks on the option chain. We'll start with the nearest date, which is November 22nd. Actually, not that one, November 29, because obviously November 22nd is only 2 days from now. So probably will not be a good selection based on the amount of premium left, which is only for 2 days. If the stock was very high price, like $200 a share or more, maybe yes. But in other cases, it would be difficult. Okay, so we're gonna add -1 standard deviation below, +1 standard deviation above, and that tells us that from now until November 29, which is next week, okay, we should be able to have that stock range between anywhere located around 81.24 to 85.82. Okay, so 81.86 more or less are the values I want to keep in mind. And if I keep in mind 81.86 and I draw a couple of lines, so 86 is around there and 81 is around here. Okay, in other words, if I was to go below that UFO, which is the nearest UFO beyond 81, I am in an okay position because I got 2 UFOs to defend myself in the bottom part. And if I was to move my line to here, I also have 2 red UFOs to defend myself. So it's looking okay for me. Looking at the vertical distance from the current price to the bottom line, okay, I'm just very easily measuring the vertical distance by doing that. So you can see we are more or less equal distance, It'd be nice that when Starbucks opens, there is a little bit of a push to the downside that would inflate the value of the options. And on top of that, it would bring us closer to the perfect midpoint of this range between 87.19 and 79.55. So the range looks nice. Now the key question is, do we get paid enough if we sell the 87 calls? Okay, do we get paid enough? So let's go ahead and look at the option chain, looking at the 87, and using that expiration date, the amount of premium collected would be of only 8 cents, which doesn't work because we do have a minimum requirement, isn't it? Let me bring the notes. I'm just reading at your message now, your chat, dear. Thank you very much for that about target. Love it. Sometimes I get immersed in the charts, and for a few minutes I may forget looking at the chat box. But I love the teamwork, and I really appreciate that. Okay. So loading our rules, just as a reminder, or for the ones of you that are part of these sessions for not so long. We are looking to collect at least 35 cents when we sell options. We could make an exception and go for 25, but our selection would be to always be above 35. In this case, as we saw, it was 8. So the way to get more premium is very simple. We just need to go to the next expiration date, which is going to be December 6. So if I go for December 6, the 87 strike pays me 22, which is still not enough. So then I will need to move to the next one, okay, which is December 13. And now I do get paid 40 cents, and now it's enough. Okay, so from a premium point of view, now I'm happy. But at the same time, of course, if you now go for December 13 instead of November 29, now you are giving that stock room for movement for an additional 2 weeks. Therefore, that stock, it's not going to stay between 81 and 86. We need to recalculate that. So let's do it. And now we are expecting that stock to stay between let's call it 79 something and 87 something. Okay, so where is that then? So 87 something would bring us up here to utilize that UFO. So now we would want to be selling the 89s. And when it comes to 79, 77, which is the bottom part, that one would be good. Okay, but again, if we were to use that one, we would not be equal distance from the upper range. So I think probably would be a better pick to rely on 3 UFOs above and below and make the range to be a little wider. It would be a much more balanced trade, even though of course I'm sure you are thinking about it. The question is, are we gonna get premium enough? Because the further away the strikes, the less premium we'll get. Okay, but that would be like almost a perfect trade where we are really close to the midpoint. Okay, so it's looking nice, but again, the key is the premium. Okay, so how much we get paid if we sell the 89 using December 13? Okay, so 89. So the 89, well, the 88.5 would pay 18. Therefore, is no way the 89 would pay enough. So then that forces me and pushes me into December 20. Okay, looking for the premium. And if I do December 20, okay, so same story. I just need to confirm that we're December 20. My lines are going to be above 88 and below 79.17. So 79.17, certainly 78 is below. And the other one we said, how much we said? 88.07 and 88.89 is certainly good. So we are okay from a range point of view. So again, the key question is, will I get enough premium if I sell the 89? Okay, and here the 89 is paying us 26, okay, which 26 is above 25. We are shooting, okay, we are shooting for 35. There are cases where 25 will take it, okay, and what are those cases? Where those cases would be when the bottom part, okay, pays you much more, and therefore it is okay for you to use that strike, okay? So the bottom part, we need to be selling 78.5, okay, and the 78.5 in this case pays us 33, and this is, you know, we're having a little bit of a struggle because 33 is below 35 and 26 is below 35 as well. If one side was below but the other side was above, then I'd be inclined to be open to plan a trade and execute a trade here if everything else was okay. But at this moment in time, I am not getting the premium I need. Okay, and again, multiple things are going to be happening here because next thing you know, that market is going to open, that stock is likely going to open down, so maybe we have a little bit of a peak of premium right at the open. So given all that uncertainty and the fact that in 3 minutes time everything will start updating on the option, everything will be reset on the option chain. So what I'm going to do is I'm just making a note for myself to go back and check Starbucks right at the market open, and see what are the real-time values, okay, in that option chain, because it could be, okay, let's see what's happening with the VIX. Okay, it could be that maybe options begin their day with higher premiums, and then we may get a 35 or closer, and we may have it work. So notice how the VIX is going to open up 2.41%, and again, it doesn't mean that's going to be the case for Starbucks, but could be. Okay, so we're going to have to come back and take a look at that moment in time. Okay, now we are 2 minutes. Okay, we are 2 minutes away, or a minute and a half away from that reset time for the option chain, and therefore I'm just gonna pause here with non-directional trades. Certainly we'll want to look at well, actually, okay, I'm like, that's not possible. Starbucks is not $21. Okay, I just scrolled this to the right and I'm like, this is not possible. Okay, so certainly we want to look at Oracle. Certainly we'll want to look at GIS, certainly CSX. So there are still like 3 charts that we will go ahead and take a look. Okay, but we'll start with Starbucks because we almost have a trade setup that would qualify for non-directional trading purposes. Okay, good. Perfect. Okay, so let's change subject. So everybody, as I always say, we all change our hat. And we switch from being in non-directional mode to directional mode. And we're going to start looking at the long opportunities and the short opportunities, okay? And start planning trades for those markets, okay? I almost always start with longs, which given the market conditions that we had, or we've been having, I should say, obviously makes a lot of sense, okay? And it's been nice to see the account up to $1,500 here. But again, remember, when looking at all the positions I have here in the account, most of those positions are long positions, and this is not the proper way to have a diversified portfolio, isn't it? Meaning that, you know, I should mix some of the longs together with some of the shorts to have a little bit of a hedge in my portfolio. Okay, so let's begin just to give you that opportunity, because most of the times, you know, just because it happens to be on the top, I start with the longs. So today, to give a little more diversity, I'll start with the shorts, and I'll start looking at Win Resorts to see if that stock is giving us an opportunity for a trade or not. Okay, so now we changed hat, we are trading directionally. So everything starts by looking at the climate. The climate is telling us 6, which when the market opens is going to be 7 out of 7. So we just reached that limit, which is okay. It doesn't mean we cannot trade, but we just reached that limit where starting from today, if we take a trade with Win, we need to utilize half of the size that you would normally take, given the fact that we already reached that statistical value, okay? Now, in any case, when looking at the stats, at least looking at regular session data, it is looking like this is not a good idea to take a trade, given the fact that we are below 50. But often we switch to pre and post market, and then we get what we need. So let's do that, okay, and see what's the case today. Well, actually, it gets worse, okay? It drops from 45 to 42 to 44, which clearly reveals to us what those large institutional players, those large funds, etc., what they do with that stock, which is they try to get the trade, and if they don't get filled, they just cancel their orders, okay? And stats are kind of revealing what they're doing behind the scenes, okay? So we're not gonna be interested to entering in a market where, you know, the people that have the power to control those markets, they may cancel their orders. So we not a smart move. So I'll move to text as instruments, okay? Again, I'm looking at stocks with $100 plus first, okay? Just because you know, you get more advantage from the leverage point of view of options. So we got 48% for Texas Instrument when looking at regular session. When looking at pre-post market, that becomes 47%. And certainly in none of those cases, this is satisfactory enough for us to, oh, sorry for that. I want to revisit that. I don't think we'll have any major change, but I was using the March date. So I always use 1,587, so I just want to be mechanical, even though, again, the app got intelligence built in, meaning that, you know, those values are not going to change too much. But I just wanna be mechanical in everything I do, okay? So anyway, so Texas Instrument is not reporting the odds, the probabilities that we need, and therefore the next pick, now we are below $100 a share, is going to be DD, which is DuPont. And when looking at that stock, which is pending data loading, so we find 42%, and if we switch to regular session, 42 becomes 51. So that is certainly tradable, but now it depends, of course, on the climate. Okay, so looking at the climate, we have 4 candles into this climate. Okay, when the market opens today, is going to be number 5. And those markets are likely going to be 5. Okay, remember we always round up, so it's 6. So 5 out of 6 certainly allow us to enter a trade at that price. The average, it's currently trading at 68.65. Given the fact that this stock has been going down and today is likely going to open flat, I would expect the average to go down by 10, 15, 20 cents, something like that, bringing it down to 68 something. And if that's the case, that perfectly lines up with that beautiful red UFO. So my friends, we do have a trade set up with DuPont to go ahead and plan a trade. Of course, we need that stock to go back up, and when it gets to that UFO, that will be the time to enter the trade, expecting it to go down, continuing and expanding and propagating that climate for a few more red dots, and hopefully bringing us to our target. Okay. So what are we gonna do? Follow the process. Process number 1, climate, we just did. Process number 2, step number 2, look at the target. So to look at the target, I am activating AutoUFOs. I am gonna maximize this chart. I am zooming out, looking for where the buy on field orders may be. This may put me in a position where I need to go back to 10.15 or 9.13. Okay, so we'll start first with, I want to start with something like August 15 and see if that is enough data in the daily time frame for us to find what we need. And if not, we'll go to 2013. So August 2015, I believe is what I said. And by doing that, it's loading. Well, actually, I could have saved a little bit of time by disabling auto climate as well, so I would alleviate a little bit of processing power, but it's okay. And here we go. Here is our first green UFO, and that is located, I'm gonna make a note for that. It's located at 59.86. So 59.86 is the location of that green UFO. By the way, I'm positive, and I believe that what's happening on your end is that you are just following me, watching the session, and hopefully working in parallel with me, loading the same charts that I do on my end, on your computers, etc., etc. But at the same time, you've been quiet for a very, very long time now. So if you don't mind, I'd love to ask you for a little bit of feedback. And even if the feedback is, I'm doing good, everything is okay, I'll still very much appreciate if you could confirm this is the case. So please go ahead and give me a little bit of feedback, so I know you are all following the plan of the trade. Okay, so again, we are planning on a short. We concluded the climate is favorable for a short. We concluded auto UFOs are lining up with the average. That's favorable for an entry. We just found our target. Okay, so basically, we are ready to begin planning the trade from an option point of view, which we will do in 2.5 minutes when the market opens. Okay. Very good, Lisa. Very good. Very funny. Very nice. By the way, Lisa, hopefully you had the opportunity to catch up with the sharpening session we did last weekend. We were talking about TOS and TradeStation and probabilities and ranges and all of these things. So hopefully you did. Nice. Okay, so here we go. So continue. Maybe I have time to look at another chart. So what else do we have here? Well, really, WB may not be super liquid. Twitter and eBay may be okay. I mean, certainly okay from a liquidity point of view, but they are kind of like low price point, $35, $29. So look, I'm gonna leave eBay and Twitter for the very, very end. And if we really had no trades or no setup was really making sense, then we will come back and take a look and see if those are tradable opportunities. But for the moment, again, in options trading, you certainly want the underlying asset to be of the higher price point as possible. I mean, even if you were to be trading a limited size account, it still gives you a greater advantage if the asset is, let's say, at least around $100 a share, something like that. When you start going down into the $30, $40, $20, it's not like you could not do it. You could certainly do it, okay? But you kind of like, I mean, the cheaper the stock is, the more the stock becomes an option. The stock becomes an option, and you know what? Options got time decay and they expire, but stocks don't. So if the stock is cheap, just trade the stock. So that's why normally I have this starting point. Okay, but again, talking about time, market will open in no time at all. So I'm gonna prepare myself for the Starbucks trade. Okay, which is from where we left before. We look at the Starbucks trade. After the Starbucks trade, we will complete, we will look if other non-directional trades are valid, and then we will complete the DD trade, the DuPont, and then we'll go for the longs. Okay, we'll go for the longs afterwards. Got it. Very nice, Lisa. I'm just reading your message. Very nice. Very nice. The key is that we are in sync. Okay, that's the key. Okay, come on. Market, time to open. We are eager to trade, so do not have us wait. Thank you very much. So the market just opened. You see, sometimes it's just that easy. You just need to be nice and be polite and ask the market what you want, and that's it. So we are dealing with a trade on Starbucks, right? We decided that in order for us to do this trade, we were going to use pre and post market data. I mean, you don't see the UFO below because it was using March data on the chart, and I just changed to my 1,587 bars, so that's why we don't see it. But you probably remember that's where I put my line earlier. Okay, so we know we got 3 UFOs above and 3 UFOs below, even though we only see 1 green UFO. Okay, and the option chain is now updating, so I am now coming into the Option Station Pro, and remember the key question was how much I get paid for the 89, and it seems that I get paid a little more than I saw before. Okay, and if I look at the 78.5, I also get paid a little more than what I saw before. So I get paid 31, which is almost 35, and I get paid 26, which is, again, I think earlier was 23. So it seems like the VIX suggested that there is a little bit extra premium in the market right now. That's nice, but hey, we are not meeting our requirement, and therefore we're not gonna improvise trades and break the rules. So the only way to do this would be to go for December 27. Where if I was to do that, now I do get my 36, okay? And if I look at 78.5, I do get my 52. But let me tell you, I'm just gonna tell you we're not gonna do this trade, because when you look at the spreads available at these levels, from 0 to 72, from 10 to 93, this is completely nuts. Yes, the market just opened like a minute ago, almost 2 minutes. But yeah, this certainly represents a great lack of liquidity, with only 41 contracts at this price and only 27 contracts at this price. This expiration date, December 27, it's not liquid. And by the way, this happens very often. I was thinking about it as we were coming to that date, and I'm like, oh my God, it's gonna be so tight. Because, you know, when you look at December 20, which is the 3rd Friday of the month, obviously we know this is what is normally called or named as the monthly expiration date. So the monthly expiration date is always the most liquid expiration, and therefore, when people want to use weeklies, they kind of have a tendency to use shorter term weeklies prior to the monthly, and if they get into 10, 20, 15, 20 days of expiration and they need more, they just go for the monthly. But basically, there is a lot of loss of interest beyond the monthly until you get to the next monthly, which would be January 17, which is 58 days to expiration. And therefore, that weekly expiration date has very limited liquidity because of that purpose. Okay, so yeah, so that's what it is. Okay, this is what it is. So it's borderline, almost there, but it doesn't meet our rules. Okay, so we're gonna continue with the process, looking at the non-directional trades. And so we looked at all of these, and therefore, yeah, we said Oracle, GIS, and CSX. Okay, good. So those are the three ones that we're gonna be checking now. Okay, so looking at ORCL, Oracle. So Oracle is providing earnings on December 16, so that gives us great level of flexibility, 48% with pre-post market, with regular session data we get 50, which is better. So obviously that is going to be our pick. Okay, so this is the setup, and again, without even thinking about it, so we are just gonna go ahead and input ORCL. I can see Bojan multitasking very much, isn't he, Bojan? Love it. So we're gonna enter using November 29, analyze and sell an Iron Condor, just so we can get the projection. Okay, and we already have a trade here with Oracle, which is a long trade, by the way. Okay, which you guys may be managing already. Here we go. Just want to make a little bit more space. Okay, so we have positive 1% above. We got negative 1% below. It's very important, guys, if you're gonna enter a new trade and you already have a real trade running, and therefore you see these two positions here. Okay, it's very important you make sure they are unchecked. Okay, here and here, because if they were checked, they would impact the simulations that we're gonna do afterwards. Okay, so make sure you keep that in mind. And by the way, the best way to do this would also be to put those two together like that. Okay, so that way it's gonna be just a little neater when observing that. So it's only one line instead of two. Okay, so where are we at? Good. November 29, that's the expiration date we just inserted. And from there, with one positive one and negative one standard deviation, this is telling us around 58 and a little below 55. Okay, so around 58 and a little below 55, that would bring us up to around 58. Okay, and a little below 55, it's somewhere around this area. So if I was to go for a little below 55, that would bring me to that second UFO, which is 52.55, and I would need to go for the next one. Okay, which probably would push my below line lower, but before I do that, my main concern is, am I getting premium enough? Okay, so I want to check the 59 call with that stock, Oracle, using that expiration date, which is November 29, to see if the 59 pays enough, which it doesn't. It's only 2 cents. Okay, and that's one of the problems of using stocks below $100, such as that stock. Okay, so the only way would be to go for the next, which is December 6, but also we get paid 6 cents. If I go for the next one, December 13 is gonna pay 22. That's better. So maybe December 20, it's paying 56, and that's very nice. Okay, but at the same time, of course, the impact of using December 20, which is our range is gonna widen. Okay, so let's take a look at how much the range would widen if we use December 20. So now we are looking at the 60.5. Okay, 60.5. Okay, and look, even without looking at the chart, 60.5, how much is that? We get paid 24. Well, you know what? Maybe. So let's take a look at 60.5. 60.5. No, not a good news, because 60.5 will brings us higher than these UFOs, and therefore we are not going to get premium enough. Okay, so yeah, no Oracle. Again, the other two trades, unless those options got huge amount of premium, they are also looking unlikely. Again, when you start with a lower price point stock and the VIX is low the way it is, it makes it more difficult. So loading GIS, checking earnings on GIS. So GIS reporting earnings on December 17, that's nice. UFOs above and below, that's nice. 56%, that is nice. Pre and post market will bring 56.92 to 48. So certainly very clear case. We're going to use regular session data for that stock, and certainly we're going to check. I told you that those two remaining non-directional trades may be a little tough to make them work, but certainly it's worth it to try because if they work and the stock is a low price point, it means that options are really overloaded with premium. Okay. Interesting. Yeah, I'm just looking at the option chain. Yeah, interesting. Okay, so yeah, one thing that's going to make it difficult as well is that we only have $2.5 strike price increments. Okay, so anyway, let me share my thinking. So when you hear I say interesting beyond words, you know what I mean. So I'm just gonna add plus 1 standard deviation minus 1 standard deviation, as we always do. This is telling me 56 and 49.90, so a little below 50 and a little above 56, $6 range. So let's go take a look. 56 is there. Do we have anything else above? Okay, let me check. Because if that was to be all times high, okay, no, it's not all times high. Great. So we have stuff above. We just need to load the chart. And this is 2017. So I'll start first with this peak. That's 1217. So I'll start first by loading December 2017. And if I don't have UFOs above, then I would go try to find more. So pending data on the upper left. So we're just waiting for the data to be downloaded. Yeah, Bojan, I saw your message in the Telegram group. So yeah, that was the clue. Okay, good. So we have another UFO there, great one. Problem is very far out. So this would force us to sell the 57. Okay, so the question is, do we have premium enough if we use 57? 57, that would force us to use 57.5, and this basically pays us nothing. Okay, so yeah, that was the problem I was mentioning earlier. I mean, the problem here really was not the 2.5 strike price increments. The problem was that the next UFO was way too far away. If it was around 56 or 55 something, a little above, maybe we can play with it, but not with this setup. Okay, so we're going to look at the last opportunity for an under-directional trade for today, which is going to be CSX. And once we are done with this trade, we will go back to directional. We'll complete the DD trade and look into the longs. So CSX, okay, showing 53% probability. That's good. But before we get excited, let's check earnings. January 14, nice. So let's go for it. 53, okay, with regular session data. If I use pre-post market, 53 becomes 48. So that's not good. We're going to use pre-post market. Problem is that I'm going to have to sell options at least below that UFO. Let me see the upper part. Yeah, so that was the UFOs that we see here. The red UFOs that we see, it's how high it went. Okay, there's nothing above. That's the all-time. Actually, there is. How did I look at that? Wow. Yeah, but it's 79 something. How far in time do I need to go to get paid enough on the 79s? So if I look at December, 79 is not paying enough. If I look, the next one is going to be like 60 days, right? What, 37, January. Yeah, not even the 80 is paying 15. Okay, yeah. So yeah, no trade, guys. No trade, no non-directional trade for today. Given the current level of premium available in the market, given the stocks that were picked by the scanner, given the fact that the VIX is quite low. The VIX is always a nice reference to kind of organize your trading day and save yourself some time. Okay, so the VIX is very low. I mean, since multiple days, we've been down here. Okay, and remember a few weeks ago, it was so much easier for us to find non-directional trades because we were here. but now we are in the 12s, 12, 13, right? And obviously that means that the majority of options in the market are going to be low premium, and therefore it makes it more complicated. Okay, so hey, no non-directional trade now. We're going to get directional, and then the latest part of the day, if we have time, then we look at the neutral, which is another way to do non-directional, but which is a little directional at the same time. Okay, so that's why we call it neutral. Okay, I get a sip, guys, if you don't mind, and we'll continue. Okay, thanks for that. So anyway, let's continue. We're gonna complete our trade with DD Dupont. So the plan was, okay, and nice, the stock is moving back up, so hopefully it will reach that red UFO. So the plan with Dupont was, given the current climate, okay, we were going to enter a trade short with a target located right below 60, okay, which is 59.86 to be precise, based on what we said earlier. And what we expect is that it's going to hit the UFO and it's going to start falling and falling and hopefully reach our target, and we will now congratulate ourselves. Okay, that's the idea. If it doesn't work, remember, we're going to be buying puts here, isn't it? So we're going to be buying puts. So if it doesn't work, meaning that it goes back up, we're not going to use a stop, because that UFO may not work, but the next or the next, okay, or the next may turn it back down, okay, and you'll be able to then act on the trade and hopefully exit, maybe, I don't know, somewhere in here. It's not going to be an amazing profit, but if you could convert what would be a loss into a little bit of a profit, you know what, we'll take it. Okay, so that's the idea, and it's very convenient to do it like this with stocks, because as we all know, I've said it many times, stocks are a fragile asset. And fragile means that they have many things that depend on, such as stocks that are competition, the sector itself, the broad market, including markets from other continents that impact other markets. Okay, so what may happen in the Chinese market may have an impact in the US market, and vice versa. So all those things are out there, and we need to keep all of this in mind. Okay, so I'm just gonna write how we're gonna do this trade. This trade is gonna be a bear put spread, correct? Bear because it's a bearish trade, we make money as it falls. Put because we're gonna be using puts, and spread because we're gonna be using two. So one of the put, okay, we will buy a put, okay, in between. Between means between the entry price and the target price, okay, and then we will sell a put beyond the target. Okay, beyond means lower than the target in this case. If it was a call spread, it would be above the target. Beyond means further away, right? So okay, since the target, okay, since the target, we concluded that the target should be 59.86, okay, based on the UFO we found on the daily time frame. Then it seems that selling the 60 put as a initial try could make sense. You may go for 59, 58, 57 and a half, whatever is available. Again, it's okay to start with the one that is the nearest, even though in this case it's technically not beyond, it's actually just a little above, isn't it? But it's okay. We're just going for the nearest, okay? So I'm gonna pick DD. Okay, so I'm gonna get ready to plan this trade. The next thing I need to do as the option chain loads is to pick an expiration date. And you know, for me to be able to do that, I also need to calculate the time to target. So I'm gonna take my entry point, which the entry is gonna be right here, which is 68.01. Okay, so the entry is gonna be, okay, entry at 68.01. That's going to be the entry. Okay, so I'm going to calculate the distance between 68.01 and my target, which is 59.96. This tells me it's an $8 move, what we are trying to accomplish here. It's a nice move for a stock which is $68 per share. And in order for me to have an estimation for how long it's going to take for me to achieve that target, I'm going to activate average true range that tells me that that stock is moving as an average of $1.9186 a day in the recent times. Therefore, you would need, if it was just keep moving in that direction non-stop, you would need 4 days to get to the target. But of course, we don't expect the stock to move at that speed. So normally we give the stock 1 full week to net a 1 daily ATR move. So this times 7, it's actually telling us 29.3 days is what we need. Okay, 29.3 days is what we need. So when looking at the option chain, we'd want to look at least December 20 expiration. And the reason why I said at least is because there is another condition that we need to be watching for, which is the earning dates. We want to pick an expiration date that provides more than 30 days, but also lines up with the next earning dates, which in this case is going to be January 29. Okay. Why do we want to do that? Well, we have lessons on that, isn't it? But long story short, this way we're going to have less pain when it comes to the expiration date. Obviously, the expiration date that is the nearest to January 29 is going to be January 17, and that should give us plenty of time. This is double the time that we need to get to the target if the trade works. So that should be okay. And now that we got everything in front of us, okay, so then I'm going to right click to analyze and sell. Let me rephrase that, analyze and buy a vertical spread, okay? How is it going so far, everyone? Can I get a little bit of a confirmation out there that things are good? So I'm gonna analyze by a vertical, which is gonna be made of 2 puts, 1 put that I buy and 1 put that I sell. And the one I sell, remember we said is gonna be the 60. Okay, we were going to start with the 60. Okay, so 17th of January 2020, and the one we sell, red color, is the 60. Okay, let me write it down. So bear put spread using Jan 17, 2020. Okay, and we started with the 60. Cool, very nice. Nice to see that everybody's following. Very nice. Nice to see you, Ruben. Very nice to see you, my friend. So, good. So we continue. Great. So, now, what else do we need to keep in mind? We need to keep in mind our target value, 59.86, and the entry, 68.01. Why? Because in the analysis tab, I'm gonna input those 2 values so I can become more aware of what's gonna happen to the Greeks of this position as I get to my entry and my target. Okay, at entry I have some conditions that I need to meet based on the rules that we covered in some of the sections that we've seen before, isn't it? Which is you need a minimum of delta of 30. Now in this case negative 30 because we're shorting, so it's negative. Okay, but the net value is still 30. That doesn't change. And then when it comes to the target, you know, we don't really care much about the delta, but what we really want to see is that the gamma is positive, where in this case the gamma is negative. Okay, so we do have positive gamma at entry, and we got a delta of 30. That's very nice. But when we get to the target, unfortunately, the gamma is becoming negative. Okay, and it's not wrong if you were to take this trade. It's not wrong. Notice how you still went from 30 to 36. So there is an improvement of delta as the stock went down, thanks to that positive gamma. But even though that's the case, there was a moment in time where it inverted. It went from positive to negative. Okay, you could actually see it here. You can chart it. Okay, where, you know, as the stock is going down, the delta is falling. Okay, and the moment it crossed 62.40, now the gamma is becoming negative, and therefore, starting from that point, the delta diminishes. Okay, the delta does not increase anymore. The delta now diminishes, and it's not ideal. So it's way better if we were to achieve a setup with the strikes where the gamma remains positive at all times and the delta it's 30 at a minimum with a negative sign in front because we are dealing with a bearish trade. Okay, so I'm spending a little bit of time here to plan this trade. I could do this way quicker, but since it's a long time we didn't plan on any trade that is bearish, so I thought of taking a little bit of time just to make sure everybody's with me, because again we are looking for the positive gamma, but we are looking for the negative delta, and I just want to make sure no one gets confused. Okay. Great. So let's continue. How can I make that delta more positive? Well, first of all, I also need to look at my entry strike, which is in the right place, but I didn't say it. So, I just want to make sure everybody understands why 67.5. What did we say? We wanted to buy a put in between the entry 68 and the target 59.96. And certainly 67.5 is right there, which is in between, correct? So 67.5 was a good starting point, but again, we end up with a gamma which is negative, so I'm gonna have to do something about it. So what can we do? Well, you can lower the 60 strike to 57.5. If I do that, remember that's why we have the rule is called beyond, right? So you can just push it beyond. So 57.5, okay, it's still leaving the gamma to be negative, but instead of minus 1.6, now it's minus 1. So that's better. Okay, now it also had another effect, which is it created more delta. Okay, and we don't want more delta. So one way for me to reduce that would be to drop it to 65. Okay, if I drop it to 65, my delta becomes 23. Well, now it's too little. Okay, now it's really too little. So take a look. I can keep moving my 57 to 55. Okay, and now what do we have? I have positive gamma in both cases, okay, but I'm not reaching my 30 delta. So what can you do? You can just keep moving it another one to the 50, and if I move it to the 50, well, that is now amazing, where I got my both gammas positive and my delta. I think we all agree that's as close as it gets to negative 30. So that's good. Okay. Having said all of this, there is one concern. The 50 put is very far out, and my question here would be how much I get paid for the 50 put if I sell it. And notice how the midpoint is 15. Okay, 15 cents, where the other one I was buying it at 65. So if I buy the 65 and I basically pay 3.47, and then to do the spread I end up selling the 50, and the 50 only reduces my cost to 15. Basically the cost of the trade will be 3.47 minus 15, which let's call it 3.32. That would be the cost of the trade. So yes, I diminished 3.47 to 3.32, which is 15. So you could certainly take that, but at the same time, imagine something crazy was to happen to DuPont, and that stock was to fall overnight 40%. It's not likely to happen, but we've seen that happen. So if that was to happen, that 50 put will cap your profit, and in order for you to have your profit capped, the only benefit you get is 15 cents, which to me that's very little. So I would rather just buy the 65 put and that's it, and do it without anything. So if wait a minute, I was pointing at, sorry guys, I was pointing at the call side. I don't know how I did that. Yeah, such a silly location of my mouse at that moment in time. So we're doing the put side, right? So you're doing 243, 248, okay? So the midpoint is 246 minus 15. Again, it's 230 something, 231. So again, it's kind of the same conclusion I got, right? So this is very, very little amount of premium. So I want to explore two options, which is number one, what if I was to sell a single put? What if I only sell the 65 and that's it? Okay, so if I sell the 65 and that's it, let me uncheck the vertical. Okay, so the vertical is unchecked and I'm only looking at the single. Okay, if I was to do the single only, it would. Did I click on minus? I'm not sure what's happening to me today. Okay, but it's good that I realized my mistake. I should buy, okay, we are buying the put, not selling the put, okay, buying the 65. So buying the 65 put is giving me a delta of negative 32, which is little more than 30, but it's fine. And then we also have gammas that are positive all the time, non-stop, which is really, really nice. I mean, if you're wrong on this trade, you lose 72. If you're right, you're gonna make 350. So certainly the trade is it's very nice, very nicely worth it in that sense. And certainly if I was to pick between the vertical and the single put, I would do the single put, okay, based on everything I just said. But I want to give the vertical one more chance, which is, okay, what if instead of using the 65, what if I was to go back to my original 67.5? Okay, could I find a setup with the strikes, maybe 67 and 55? Well, if I do 67 and 55, I do end up with a positive gamma and zero gamma. Okay, it's negative 008, let's call it 0. So I would take that. Okay, my delta is a little bit more. Okay, my delta is a little bit more. But basically it's okay. Okay, so this position would basically hurt me by having time pass by times $1.67 a day, and worst case I will lose 77 in order for me to make 343 if I'm right. Okay, so basically it's a very similar trade from that point of view. So 342 divided 81, so this is like a 4-to-1, and it would cost you $80. But if I do the other one, okay, if I do the other one, this trade would only cost me $70 instead of 80, and if I'm right, I'm gonna make 352 out of 71, so this is like a 5-to-1 almost. Okay, so in this case, it seems it's pretty clear that the best choice, okay, would be to just go ahead and buy the put, and that's it. And again, it all comes down to the price of the stock. Okay, if that stock was to be a $266 stock instead of 66, well then maybe the spread is worth it and gives you better parameters. But given the fact that the stock is 66, so it's looking like utilizing the 65 put will end up producing a better result. So the choice for this trade will be to use the 65 put using a January 17 expiration date. Okay, we are not gonna do okay, let me adjust this so it looks more organized. So we're not gonna do a spread, so it's gonna be just like a long put. Okay, so we're just buying a put using January 17, 2020. The put we buy is gonna be the 65 put, okay, which is certainly in between. We don't need that any longer, I guess. And our target would be down at 59.96. Okay, so that would be the trade. So I'm just gonna place an order, and I believe that would be the end of the session for today. I will just place the order, and that is it. That would be our trade for today. And we'll be waiting for the stock to rally until it reaches 68.01, which is the entry point. Okay, so again, keep in mind this trade is risking about $70 in case you were to be wrong and the stock was to go all the way against you. So per contract, the most you would lose is 70, 71, something like that. So make sure you understand your account size and the risk you want to assume per trade, and this would dictate how many contracts you're going to use. In my case, since I'm demonstrating this for you, just for you to see how it's done, I'm just going to use one contract. But keep in mind, if you use 2, it's double the risk. If you use 3, it's 3 times the risk. I believe this is known by everybody, but just in case. So when you use market price, activation rule, and the activation rule will have me trigger this trade based on DD price. If DD rallies to 68.01 or above, okay, then place order by that put. Okay, so quick summary: buy to open the January 20 65 put if only if DD is greater or equal than 68.01. So I'm going to click yes, 1, 2, 3, and the order is now here in the top part of my manage window, and we are in. That's it. We are not in the trade. The order is in the system. That's what I meant. And now we're just waiting for the stock to come to us. Okay. So my friends, we just reached the top of the hour. Actually, we surpassed the top of the hour by a little bit. So I believe it's going to be time to conclude the session. I don't see any more comments, questions. So I guess everything was clear. Today we kind of reversed. Most of the sessions we've been doing non-directional and longs. Today we've been planning on non-directionals and shorts. Okay, so hopefully the diversity is helping you to be able to do this on your own during the remaining days of the week where we are not getting together. So you can certainly go through the process yourself. And I know some of you are doing a great job. So keep it up. And for the ones of you joining, since not so long ago or watching this recorded, make sure that you keep watching, you keep updating yourself with the sharpening sessions that we do, the recordings, etc. So you keep yourself in line with what we do in the session. And having said all of that, I'm just gonna say goodbye, everybody. I'm just gonna say see you next week. Next week is gonna be very busy for some of you and certainly for me, because you probably know that next week I will be, apart from doing the get-together sessions, will be running a special Forex class from Monday to Friday, 3 hours a day, which, by the way, if you have any interest in being part of it and you didn't know about it, you can certainly shoot an email to us and we can send you information in case you want to be part of it. Keep in mind, it's a class where the only asset we'll deal with will be Forex, and also it's a class where we talk about everything that is needed to trade. Meaning that we'll start from very basic, and then it's gonna get interesting. But we will also start from very basic. So for some of you that may know Forex, some of you that have been trading for a while, you know what's long, short, stops, all these things. Just keep in mind the beginning part of the class will be basic. To make sure you understand the type of class that it is. But if you are willing to or interested in joining me, I'll be delighted to have you again from Monday to Friday, since 8 a.m. Eastern Time to 11 a.m. Eastern Time, 3 hours a day. And the class will be recorded. So if you cannot make it at that time, you can catch up on the evening, and then hopefully next day you can join us live. And apart from that, we'll be doing the get-togethers. So I will see you in the get-together sessions too, guys, which will be at a different time. And we will have fun. Okay, so see you there. See you soon. Keep up the good work, okay? And keep up the discipline and everything else. See you soon. Bye-bye.